Hey friends, welcome back to Wisdom Wednesday. Michelle Day, real estate broker in the beautiful state of Colorado. Welcoming back. Thank you. Not Norkus. I got it right this time.
You did. Thanks for having me back.
You're so welcome. So today we're going to talk. Everybody knows that the housing market is bananas right now, right? So sellers have more options into who they pick to purchase their home, which now decreases the buyers. Like say if you have to sell a house in order to purchase another house, the contingency, right?
Yep.
So let's talk a little bit about that because if I need to sell this house, typically, right, that's how it works. I need to sell this house before I go on to purchase my next one. But now other sellers are just not taking those offers in because it's just honestly can be a huge pain in the ass. So what are now those buyers doing with the house that they have to sell? What is that option?
Yeah, I'm working with a lender right now who's in that same situation. They're basically the home they want to buy is a new construction. They're saying no contingencies. So now they have, so their home now, which would normally be an asset where they could sell, is hurting their cause in buying their new home.
Right.
So instead of them selling their home, I'm suggesting they rent their home.
Ooh.
And by doing that, there's a number of benefits from that.
Okay.
One is that because of the low interest rates, they're able to qualify for more loan with the same income. Unfortunately, his income hasn't gone up in the last 5 years.
Right.
But what has gone up is the equity in his home has gone up. And so he's able to qualify for more house on its own. That home is now, instead of it being a liability, is now an asset. And he is able to, once he refinances his original home, cash out, use that cash to put as a down payment for his new home, and then the rental market will cover, his rent will cover that new mortgage, and then some. When we're doing that, there's about a $400 to $500 difference, and so he actually is going to make money on renting his old home.
And it makes sense, and now pays for the new mortgage.
And exactly, so that pays that new refinanced mortgage, and then he's got his lump sum. I think he's got $400,000 in equity in 5 years.
Right.
He can now put that down on that $900,000 home, and now he's just making payments on a $500,000 mortgage.
I love it. It's such a creative way of getting around it. And obviously there are other options. We won't get into it today.
Yeah.
We will maybe next time we meet.
That sounds great.
Yeah, because I think that there's so much out there. But certainly a super fun and creative way to kind of get around that obstacle that a lot of people, you guys, are facing today.
And the last thing that I love about this is that if down the road he does sell this in a year or 2 years, instead of getting market value in June 2021, he's going to get market value in June 2022. And so if it goes up another 15% to next year,
yeah,
he's just going to make bank.
Yeah, and that's it, and that's what we want,
Yeah.
right? We want our clients to have the most amount of money in their pocket with
Totally.
the least amount of stress. It's kind of our goal.
Exactly.
We're like superheroes. It's true.
Try to be.
All right, guys. Well, thank you so much. Next week, I thought it would be fun for us to get our hands dirty. So let's get into inspections and let's see how dirty we can get. I'll see you guys later and happy hump day.